the things I want to talk to you a little bit about is what is living benefits, what are living benefits, and what is long-term care. Many of us know that there's a chance we're going to need to have some extra help as we age. Sometimes based on family history, sometimes we've had bad experience with family members who have struggled to pay for those types of things. But we don't necessarily know how to plan for those things. So let's just kind of start with some of the basics. First of all, what is long-term care insurance? Well, long-term care insurance is a type of insurance you can purchase to help pay for things like skilled nursing facilities. Now, with long-term care insurance, it is quite pricey, and we're kind of assuming that you're going to need long-term care facilities. Now, not all of us do. Maybe about 40% of Americans end up having long-term care needs over their lifetime. But that's not the best of odds, right? If there's a 60% chance that we're never going to need this and we're going to spend all this money. Long-term care insurance is also a use it or lose it expense. You don't get the money back if you never use it. So that becomes a little bit of a costly option for many people to try to predict the future of how are they going to care for themselves. And I realize there are some families that have really prominent diseases or just dementias or things like that, that it's probably highly likely, but for many of us, it's not the right option. The other thing with long-term care insurance is long-term care insurance also pays the facility. The nursing facility, the skilled nursing home, is going to bill the long-term care insurance every single day that you are there in their care. They also have to get approvals from the long-term care insurance to get paid, and ultimately the long-term care insurance decides how much they get paid. And the challenge with that is, and especially if you're one and you're not in a place where you can talk for yourself, is your family then has to help facilitate all of that, right? It becomes a constant billing of insurance game. We have a solution for that, and this is something that many people just don't realize, is life insurance with the right carriers has something called accelerated benefits. Another word we use for them is living benefits. And living benefits is an amount of money that the carrier agrees to pay if you have certain kinds of medical conditions or inabilities to care for yourself. For instance, things like cancer can qualify as a critical event, or a stroke, or a heart attack. And I like to call those life's wake-up calls, right? It's like, hey, I need to pay more attention to my health and maybe work a little bit closer with my medical practitioners to make sure that I maintain my health. So those are our critical events. They'll give you a small amount of money, and that amount of money can be used for anything you want. It doesn't get paid to the practitioners. It gets paid to you directly, and it can be great for things like if you have co-pays or you want to seek medical treatment maybe out of state or somewhere else, or if you just have bills to pay, or you have a bucket list that you want to tackle. They will give you that money. And everything else that's remaining in your policy will simply go to your death benefit. Then the next phase of that is what we call chronic, and those are near and dear to my heart. That is when you can't do 2 of the 6 activities of daily living. So toileting, transferring, bathing, feeding yourself. Those are the types of things that put you in a skilled living home, a long-term care type of thing. The other thing is, when they pay you, just like with the critical, they're going to pay you directly. So you get to make the choice, and it's going to be one time, a lump sum. You get to make the choice of how you spend that money. So it's not going to a long-term care home who then uses the money to make, capital improvements to their home and, pay for the people that are taking care of you and the foods and all that. It goes directly to you or your family. So you can use that money to do things like hire an attendant at home, which keeps you out of the skilled nursing facility, because most people, if they're cared for in their homes, will tend to have a better outcome if they're in that facility, because they're not subjected to maybe other diseases or just illnesses, or just in general they have more attentive care in their home. You can also use it to modify your home. See, you have all this flexibility in how this money is used. And just like critical, you'll get a little bit more because this is a more serious condition, but just like critical, anything that remains will go towards your death benefit. Will go after you have passed. That's what makes it all tax-free. And then lastly, we also have terminal, which is kind of obvious. It's 6 to 24 months to live. That's really when we're talking about you needing hospice care, or maybe you have that one last dream that you want to fulfill. And again, it gets paid to you. There'll be a much smaller amount that remains to your family, but a much marginal amount goes to you while you're living. And that again is your option to spend it how you want. So if it's something that you want to have all of your grandchildren fly in to spend one last Christmas with you, and you're going to go all out and buy each of them their dream present and do some kind of dream activity, you have that option. If it's maybe going someplace warmer to like enjoy your final months or years, you have that option. There's a lot more flexibility, and you're not having to play that insurance billing game.